Welcome to Turning Hard Times to Good Times. I am your host, Jay Taylor, speaking to you from New York City on this, the 9th day of April, 2019. I do want to remind you I am the author of Jay Taylor's Gold Energy and Tech Stocks, and you can subscribe to my newsletter by going to miningstocks.com, miningstocks.com, or you can call our office in New York City during normal work hours at 718-457-1426, 718-457-1426. We do like to plug Chen Lin's letter, What is Chen Buying, What is Chen Selling, especially if you have an interest in the biotech sector. Early biotech discoveries that Chen follows, and he's done very well for his subscribers. Chen also pays some attention to the gold shares, some of them that I follow in my letter, and as well the energy sector he's done very well in. So those are the areas, if you're interested in those areas, you might want to consider subscribing to Chen Lin, chenpicks.com. And Michael Oliver, who will be with us in just a moment. We always encourage you to check into Michael's work as well, and that's olivermsa.com, olivermsa.com. I do want to thank you for listening to the show, making one of the more widely listened to shows on the Voice America Business Channel, and I do want to invite you to keep sending along your comments, whatever they may be, to questionsfortaylor@gmail.com, questions, the number 4, Taylor@gmail.com. And, of course, we do want to thank our sponsors for making this show economically possible. Novo Resources, Triumph Gold, Merrimont Resources, Great Bear Resources, and Klondike Gold are our sponsors for this week's show. I've titled this week's show, Preparing for Gold as Currencies Crumble. Alistair McLeod, Peter Talman, and Michael Oliver are the guests for this week. The global economic outlook is deteriorating. Government borrowing in the deficit countries will therefore escalate. U.S. Treasury data confirms foreigners have already begun to liquidate dollar assets, adding to the U.S. government's future funding difficulties. The next wave of monetary inflation required to fund budget deficits and keep banks solvent will not prevent financial assets suffering a severe bear market. But the scale of monetary dilution will be so large that the purchasing power of the dollar and other currencies will be undermined. Failing fiat currencies suggest that the dollar-based financial order is coming to an end. But with few exceptions, investors own nothing but fiat currency-dependent investments. The only portfolio protection from these potential dangers is to embrace sound money, that is gold. Alistair McLeod will be with us during the second half of today's show to explain more in detail what I just suggested to you. One of the most exciting junior exploration stories that I'm following, and one I'm personally invested in, is Klondike Gold, which company is searching for the mother lode source of millions of ounces of placer gold that has been mined in the Yukon since the late 1800s. Peter Talman, the president and CEO of Klondike, as I said, will be with me to explain the progress that their exploration efforts have been making over the last 3 years or so. It is an exciting story. If you follow this sector, it's one I think you'll want to pay close attention to. So as I say, Peter will be with me. That will be right after our first commercial break. But right now, Michael Oliver is with me once again. Thanks for joining me, Michael.
Hi, Jake. Always good to chat.
Always good to have you with me, and it's olivermsa.com, folks, olivermsa.com. And, you know, if you subscribe to Michael's letter, especially the one that has to do with the precious metals, you'll be further ahead, I think, in understanding what is going on. Michael is gracious enough to come and spend time and explain some of the things, just a few of the ideas that he has here. But if you're really invested in the precious metals market in any serious way, I think his newsletter is a must. Michael, thank you. I want to talk a little bit about your weekend missive, the Gold and Silver and Mining Weekend Report. You're really, I think, I mentioned to you, I think silver really is sort of sucking wind. It's not doing very well. I mean, as I look at historically at least, silver relative to gold is still very low priced. But you're pretty bullish on silver, aren't you? More than gold. Mm-hmm.
Yes, at this point I am. Silver, let's view this. Last summer's sell-off in gold dropped gold from above $1,300 down to $1,160. That's about in the middle of its multi-year range. Remember, its bare low in 2015 was $1,045. So that put gold back about in the middle of its clump of ink of the last several years. Mm-hmm. Silver retraced all the way back to its lows. It held above them slightly, but it basically doubled its lows. It did in the 13s. At that same time, platinum, by the way, made new lows. But they all behaved the same. In other words, they all were in downward pressure at that point, and silver went all the way back to its lows, something the gold miners did not do, for example. Mm-hmm. So gold and the gold miners held well above their bear market lows of 2015, where silver retested. So you'd say, well, silver's a dog. Well, yeah, maybe. Things change. It has a momentum structure. Forget the price charts. Again, price to us is somewhat secondary. It's also a distortion because, as you noted in your comments, fiat currencies are elastic things. Mm-hmm. And so if you use a fiat currency to measure something, you're using a rubber measuring unit. It's doesn't hold its integrity over time. So we shift to momentum of price, which gets us a bit distant from using a fiat currency to measure, and we get a different picture than what you see in a price chart. And right now, silver has probably one of the best potential massive upside breakout levels, not far above where it is now, that once triggered, I think silver will come to life like most people won't imagine. And it will regain its potency versus gold. Now, that also probably indicates that gold trend to the upside is gaining public acceptance because silver is often the poor man's gold.
Right.
And we're also seeing evidence of outside interest in gold, meaning non-gold bug interest, in the gold miners, because gold miners are now outperforming gold measurably by our work. And again, that's in the weekend report. We show how we come up with this calculation. And we're at a point now in the gold miners versus gold, for example, when you spread them against each other or measure them one against the other, that we're at a breakout point on gold miners versus gold that we were at in early 2016. Oh. If you recall, at that point in time, we noticed that gold miners were, on the spread difference versus gold, were breaking out. So you should own miners, not so much gold. And sure enough, the explosion that followed into the summer of 2016 was vastly greater for the gold miners than it was for gold. But the spread change that occurred in early 2016 signaled that move, the upward move in gold, the upward move in gold miners. We're at the same point now in our assessment that we were in early 2016, meaning expect a sharp upward movement in this whole category. And we also think that silver will come from back seat to front seat. So what existed over the last few years, which was definitely a weaker silver market than gold, we think is about to reverse sharply.
All right. Well, that's, I guess, certainly that is usually the way when we're in a bull market for precious metals, silver outperforms. When we're in a bear market, it really does horribly. It really does horribly badly, and gold usually holds its own much better. Michael, what about platinum? Platinum and palladium. For example, palladium has gone nuts. It was, I think, as high as 1,600. It's come back a bit now, but the platinum, palladium, you wouldn't touch it. You're afraid of.
I think it's an industrial situation of its own unique fundamentals, and obviously they have a supply-demand imbalance, and you're in a blow-off. We do not encourage anybody to join a blow-off late in its move. You want to get bullish on a market that's a blow-off a few years later, that's fine, but it's in a blow-off, which means once it ends, it'll probably collapse. I don't think it has anything to do with the fundamentals that will drive the gold-silver gold mining complex north. It's an aberration. Yes, it's part of the platinum group metals, but if you look at platinum didn't behave at all like palladium. In fact, platinum went down and made a new low in the summer of last year, new low below the 2015 low. However, platinum is now turning, and even on price charts we can show a breakout, but on long-term momentum, it's pregnant for a major upside. So the last low in platinum, I think, was a trap. In other words, the breaking below the 2015 low in platinum last summer was totally non-confirmed by our momentum work, meaning even though price was weak, momentum was not. And since then, we've had what? Firming action constantly. And right now it's above 900, and I think you get up to about another $30 or so above here, and it's going to launch. So platinum is, in effect, saying, me too. to the gold and silver situation. And again, don't confuse it with palladium. I think it's a misdirected thought.
Yeah, I guess certainly industrial uses, and there's shortage of palladium, shortage of the physical metal, something that can't be overcome by paper palladium, that's for sure. And so that's why I think the palladium has risen so dramatically, no doubt about it. But platinum is looking strong. And so do you see platinum as sort of a monetary metal then, too?
To some extent. Remember, it used to be. Remember back in the last bull market. Both of them peaked, by the way, platinum and palladium where? Just above 1900.
Yeah.
They were holding hands at the same price level when they peaked in 2011. And then gold made a low, the recent low at 1160, just above 1160. Platinum was where? In the 700s. So it was much weaker. But the swings in platinum, if you look at the charts, coincide with the swings in gold. Even though they're weaker, platinum is much weaker. However, we do think that platinum is now reborn and about to break out on its own merits and in effect join what's going on already in the monetary metals. Platinum's not a monetary metal, but it sometimes behaves like one. We've had those periods.
Well, it has a lot of the same attributes as gold, no doubt about it. All right, so we're looking at the gold miners looking very, very strong. Silver better than gold, and we should have some good times. For those of us that are looking to invest and who do invest in the mining shares, should see a pretty good 2019, hopefully. All right. Thanks so much, Michael, for being with us again.